Good afternoon, everybody, and welcome to the weekly LendIt Fintech news show. My name is Peter Renton, Chairman and co-founder of LendIt Fintech. I'm joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
I'm doing great. It's just the two of us today, but let's get right into it. We had another busy news week. I want to start with Nubank, and I mean Nubank continues to edge, shall we say, closer to an IPO. And the number that was talked about, like I think 2 or 3 weeks ago, of $40 billion. Now they're talking $55 billion, which is would make them one of the most valuable fintech companies on the planet. And they keep adding. Some of the stats are just amazing. Like 40 million customers, and they're now, if they go public at 55 billion, the largest bank in Brazil, Itaú, Itaú, thank you, Itaú Bank. What's the second word of it? Bank.
They're really known as Itaú.
Unibanco. Itaú Unibanco. Anyway, they're a very big bank, billions of dollars in revenue, worth $55 billion. So wouldn't that be interesting for Nubank to go out at a similar valuation? What are your thoughts, Todd?
I mean, they are the mega bank of Latin America. I'm not sure how many countries they're in. What are they? It's Colombia, Brazil, Mexico, I think.
I think it's just those three right now. Yeah,
because I think that's David Velez is Colombian, if memory serves correct. Yeah, I mean, they're basically the Ant Financial of Latin America, except they don't have the Chinese government that can just wallop their valuation, their company, and their founders upside the head. So
right.
I think their prospects are quite bright. I think the biggest question for them is, do they eventually try to expand somewhere into like the US? And do they do that to serve the immigrant population of the US that is from the Americas?
Yeah, I mean, that's quite
do
possible.
They try to take on some of the other big fintechs or banks in the US? To me, that's the only question. I think they'll dominate LATAM, South America. I mean, I don't think there's any real question about that now. The trajectory that they're on. I think the biggest thing is, how many people can they continue to bring into the system that have yet to have access to the system, as number one, so new customers in the financial system. And then number two is, will they eventually come up and challenge in the US, and how would they do that? On small, medium, large scale, or is it do they just look to become kind of that gateway of immigrants, and they become their connection back to home through an account with Nubank?
Yeah, I don't know. I actually don't know if I don't think the US is going to be their next move. I would, I think they're going. Then they're only in 3 countries in Latin America. There's plenty of other countries there. What's already astounding is 40 million people. There's 200 plus million people in Brazil, and most of those 40 million are in Brazil. As far as they've only been going in Mexico for a short time, but so they've already got massive penetration in Mexico. I mean, can they get to 80 million? Maybe. But when the population is 200 million, you have a finite number of how far you can go. But then I would think, they may do the US immigrant community. I know that Revolut is starting to look at that, but I wouldn't mind betting they'd go to Europe before they go to the US, particularly in Spain, Spain and Portugal, which are natural fits for them.
Yeah, that's true.
I mean,
some of the Chinese fintechs, their entry point into Europe and US was through expats who were living there. And so I think Nubank might follow that same strategy, in that, there's so many people that leave LATAM but still have such a deep rooted connection back, that someone like Nubank could be a bridge and acquire that customer even though they've left LATAM. So I think that's an interesting proposition for them. But in terms of their current status, I mean, they've clearly are the leader and the company in Latin America, and there's no one that's a close second.
Yeah, I mean, I really, they're almost, you could almost argue they're the leading fintech globally. I mean, take out Ant Financial or Ant Group as they now
It's
are known.
impossible to measure them too.
Yeah, because you don't really know. And China's a walled garden these days. So removing them, Nubank, by far the most dominant digital bank in the world. And like Chime just had, so they came to 20 million. So that's half of what Nubank is. Revolut, I don't think are at 20 yet. So they're still they're the
In
number
10
one
years,
big-
I'd like to see what are the assets.
Oh man, I'd love to time travel 10 years from now and find out what who is
Because
the biggest.
conceivably, Nubank will probably have a lot more customers, but dollars per customer will probably be pretty low.
Yeah.
Compared to, say, a Revolut or Chime even, and Chime's low for a typical bank. And so I'd be curious, does Nubank need 50 million while Chime needs 35?
Yeah, I don't know.
I don't know.
I don't know what the
It'll be fun to watch,
yeah,
but
it will be.
they're
Particularly
clearly,
once they're all public too, when you get to
you
find
get to
out,
actually look at the information
look at the
instead of
information.
just relying on the founders.
Yeah, yeah. Anyway, let's move on. We have a couple of big fundraisers in the past week. First one I want to talk about is Ramp. Ramp are just, I mean, they didn't exist 3 years ago, and now they're worth $3.9 billion, according to their latest fundraise, 300 million raise. And so all the way back in April, my goodness, that's such a long time ago, 4.5 months ago, they were worth 1.6 billion. So somehow they have, they've gone up 2.5 times in 4.5 months. That's in valuation. So these are the sort of things that, I mean, I think that's insane. I mean, they haven't, I mean, they are growing. They've grown up 5x since the beginning of the year. They've grown. And the founders fund that invested said, well, we normally see when companies scale, their growth rate goes down, but Ramp's growth rate's going up. Yeah, and they only have 2,000 business customers, but obviously within those business customers, they have a huge number of cards issued. So each one customer could issue 1,000 cards. So I've
The interchange thing is still worrisome to me.
Yeah.
I mean, still makes most of its money on interchange, which we've talked about many times. That's going to continue to get squeezed.
Yep. And I think interchange.
I don't know if it's eventually going away, but the basis points on it are going to be quite small. And for that, and maybe that's their plan now, is just to exploit that while they can. And as they build out other revenue generating pieces of the business, and then over time that, slowly slides to the side, and, then they build out a robust way to make money. But it just seems like there's a lot of reliance on interchange in a lot of these business models still.
Yeah, I mean, I think all of these companies are going to have to get into lending, because that's where you can actually make more money than interchange. I mean, if you're looking at long term, interchange is going to be close to zero. You might get a few basis points, but you're not going to get, like on credit cards, you can still get more than 2% on interchange if you're a smaller bank, especially. But you can't. That's just not going to be sustainable.
I think the thing Ramp points out is probably more than any other industry is small business has been uprooted more than probably anything else during the pandemic. And there is dire need for companies like Ramp and that alternative or fintech type provider space, because banks so quickly turn their backs on potential new customers, and just serve their existing customers through PPP and during the pandemic, that a lot of these companies are going to be like, why would I ever think about going back to that bank when a Ramp or some of these other companies exist, and there's just such an easier path to me dealing with them versus going to the bank. And eventually, they'll probably get into lending, and that'll just entrench me more with Ramp than having to have 2 relationships with Ramp and a bank down the block.
Right. Now, that's where all these companies are going. It's going to be they all want to be a full service. Eventually, Brex has applied
The
for
new age,
banking
the new
license.
age bank. They won't call themselves banks,
Yeah.
but practically they are
Well,
the 21st century bank.
they may well call themselves a bank. Who knows? Brex has applied for a banking license. They've actually, they've withdrawn it, but they're going to reapply, I'm sure. So anyway, and we should also note that Ramp made their first acquisition, a company called Buyer, which is a negotiation as a service. I'd never heard of this company. And I'm sure it's a 10-person startup, so they probably
as a service.
They probably paid low 7 figures for it, I guess, just a rounding error when you've got a balance sheet as strong as what those guys have. But a bigger round, albeit at a lower valuation, a bigger round, Drive Wealth, $450 million round, $2.85 billion valuation. I don't understand this one either. I feel like
this one came out of nowhere.
Yeah, well, of Drive Wealth, they've been around for a while. I think we've had them speak at our event, and they've certainly, they're talking about fractional share trade. Their main product is fractional share trading, and they offer it for others like Revolut's using them, Cash App, Square's Cash App, Moneyline, and many others are using them to. But how many companies want this sort of fractional share trading? I don't know. I feel like
the thing I don't get is, it's only a matter of time before a Revolut type, maybe Moneyline less so, because they're the amounts that they've raised at least aren't to the extent of Revolut. That Revolut just builds this in house.
Yeah, that's the biggest thing. I could see how every single company. This is an embedded finance play. Obviously, you can embed this. So I could see how you could have hundreds, thousands of companies that are offering, banks offering it, lots of companies offering this fractional share trading. I could see that. But I could also see lots of people, lots of companies deciding this. How hard could this be to build?
Or maybe they're just banking on that if they get in the door, then why, make it cheaper? And maybe their argument is that this is how much it costs to build. This is how much we are. We can get going 2 weeks from now versus 8 months from now.
Yeah.
Go.
Yeah, that's clearly what
it's got to be the play right now.
Yeah. I just and it's interesting that they are not growing as fast as valuation wise as Ramp by any means. Their only valuation was up. I think I remember reading it 20% from the last round or something like that. So, it's. I feel like we will see, but this is a sort of company that if suddenly Square says, "Oh yeah, we're doing this ourselves now," that's going to be a huge blow. Anyway, we are. Moving on. Facebook. No, this was actually news late last week. I wanted to bring it on here. It just came out just after we were on the air last week. But Facebook have announcing their new cryptocurrency, or the new it's a digital wallet payment tool. Call it what you will, but Novi, Novi. That's the name, and it's passed regulatory checks. They've got a P2P payments offering, and it is it's going to be successful because Facebook has such a massive user base, and they're going to make it
be accidentally successful just because how many people will use the Facebook ecosystem.
Yeah, people still use Messenger to send messages back and forth on Facebook, and it's going to be integrated really tightly into those sort of offerings, and it uses Diem as a digital currency. And it's Diem right now, like Novi is going to it's going to hold it's not its own currency, and so it's going to hold like US dollars, but they're also in talks with stablecoin offerers like Circle and Paxos. They're talking to those guys, but anyway, it's going to be an interesting development.
there's a lot of weird things going on in this space, because while you have all these for every Facebook type thing, you also have the CBDC going on in the background.
Yep.
They're all eventually trying to vie to become so dominant that they then kind of take on the rails aspect to it. So I don't know. I think the space is just I'm very interested in where it's going.
It's wide
I'm,
open. It's
I'm not
totally wide
convinced
open.
of anybody's project yet,
Yeah.
even the CBDCs and the governments. And so my long-term question is how and if and how these things potentially can play together. Because right now, if I were a company, I'd be less interested in building something like what Facebook's doing, and I'd be trying to say, how do I connect the governments? Can I build a technology that connects it all?
That will definitely happen. That's going to
Yeah,
be a
to me, that's
fintech
the more
company.
interesting play,
Yeah.
because it's like, kind of, um, I guess, payments as a service type thing, where it's or payments interoperability connection. I don't know what you'd call it, but connecting all these players who are private market then to the public market, eventually you're going to get to the point where you can't have these individual ecosystems.
Well, that's the thing. I mean, can you, like right now, I have a PayPal account, I have a Cash App account, I have a Venmo account. If I have a Novi account, can I send Novi to my PayPal? I don't
Probably
think
not
so.
today.
No, but that would be a really interesting play. I don't know if
That's
that's
where to me it becomes more interesting, because if you can get the pieces playing together, then it's less relevant as to who builds the most dominant, though it's still kind of relevant because the dominant will eventually take over some of the smaller players, and then it'll kind of create a 3 to 4 type player ecosystem. But is if you can get them to play together, A, that's a huge business, and B, it makes the ecosystem a lot more tenable, and you don't have to necessarily worry about, if I'm on this one, will I be excluded from elsewhere.
Yep. Yep.
But I
No,
mean, overall, it's been funny when we first had the Facebook announcement and the fanfare behind it, and then it like kind of knocked itself to the floor, and got knocked to the floor by the regulators. Then kind of slowly built up, then disappeared for a while, and then they launched this. So it's funny
rebranded, all
to
rebranded. No
rebranded
more Libra.
3 times. So it's been funny to watch the
It has.
evolution of what they have,
They're moving from
to date.
Switzerland back to the US, and like Novi is something that we're going to have to watch it. We're going to have to be
Yeah.
very much on it
Well,
because
they have 2.7 billion members.
I think it's over 3 billion now, over three.
It's
So
almost half the world's population.
half the world's population, more than half the world's population over the age of 10. That's for sure. Anyway,
and internet connected population.
yes, of course. Well, we're going to stick on stable coins for a minute here. I want to talk about Circle. So Circle, I always thought were like the good guys in stable coins. You had Tether, which was, kind of dodgy. I thought really a little bit.
It's just a bit more dodgy.
Yeah, and now because Circle, you said, oh yeah, we're backed one to one with US dollars, bank account type FDIC or insured money. Then we find out, well, actually not really. 60% of our reserves are actually backed by the federal government, and 40% are in different things. And you get it. You want to have U.S. Treasuries pay very little. You want to juice up a little bit of interest income on your $28 billion or whatever it is that they have under management or in stable coins. But now they're saying, you know what? We're going back to our original plan, and it's going to be cash in bank accounts and U.S. Treasury bonds, and that's I think good for them. But boy, it doesn't make regulators all that happy when you say something, then you change it, then you go back again. It looks a little amateurish.
Not only that, but why are you saying that you have 1-to-1? Just don't even come out and say if you're that far off. It's not like they were at like 92%. Then people would be like, all right, they're pretty close. I mean, they're not as bad as Tether's 2%.
Well, yeah, I
two and a
think what
half
they're
percent, but
what
it's I know they're thinking more cash and cash equivalent.
yeah, they're probably
Uh,
thinking, yeah, I got bonds in Apple, they're almost as good as US government bonds in,
yeah,
in Johnson and Johnson or whatever. It's
but I think your point on the regulator part is really the bigger one. Is if you're looking to become that dominant and consistent of a player that regulators will trust you, this is the exact opposite thing to do.
yeah, and they're applying for a banking license. And so and it's not a fractional banking license, it's a full reserve banking license where they're basically gonna say you buy USDC and that money gets deposited with the US Federal Reserve. And Felix Salmon had a really interesting article. I just read it this week, but it was from a couple of weeks ago in Axios, talking about how if Circle can pull that off, and that's a big if, then they're going to have a de facto stable coin backed by the federal government, which is really what a CBDC type offering would be. But that I don't think they're anywhere close getting
I think that
bank license.
the other point you made is it's amateurish. It still shows the industry is it's not where they need to be from a consistency level. Like, just say, make the language clear. And since Tether, there's been this huge push for transparency, which is not going to go away. People are going to want more and more updates on what the reserves are. And it just seems like it's like 101.
Yeah.
I
don't think I'll be very surprised if someone like Circle gets a banking license in the next 3 years. I mean, I think it's going to take.
No, they're going to go through hell to get it, basically.
Yeah, they need to be more consistent.
They're going to keep being whacked around by regulators. And they'll delay, and they'll have to withdraw, then reapply, and it'll be a dance that they do for the next few years.
Anyway, moving on to buy now, pay later. We have to mention buy now, pay later every week because it's just so hot.
Hold on, we have to mention overdraft too. I just wanted to say that.
Oh yes, of course, overdrafts. That is my favorite topic. But buy now, pay later. Klarna had released their earnings, and they are making bigger losses. This is funny because Klarna used to always be profitable. Well, not always. They've been profitable for many years. Then they started really ramping things up in 2019, and they started making losses again. And their losses, 111 million in Q2. Not a huge loss, but interesting. The credit losses are also up, but not as much as their volume. Volume up across the world 77% year over year. Credit losses up 55%. But the one metric I thought was super interesting: US volume year over year up 311%. They now have 20 million customers. Now, we remember their Super Bowl ad back in February, and I'm sure that has helped that juice that 311%. But they're crushing it in this country.
Do we know where credit was the 55% up from? What? I'd be curious to understand what the credit losses look like. Is it
Yeah, I mean, all he said, the CEO said, look, we are making large credit losses now because we have much larger volume. But when he pointed out, and I think the FT had a misleading headline, I think, because they're sure they wouldn't have been happy with it because they were talking
said losses soar.
Their losses soar, which losses are up. But when your losses are up 55% and your volume is up 77%, that actually speaks to the fact that you're really reining in, you're reducing your losses on a per account basis. So
I'd be curious if it was like 0.5%, and then it went up to 0.75%.
Yeah,
that's 55% roughly. Is that that to me would be interesting to understand, because then you can either slam the FT or you can. The article is on point depending on what the losses look like, but yeah, I mean, the bigger story is that they're growing like bandits in the U.S. and buy now, pay later is here to stay for quite some time.
Sure is. Okay, moving on. I want to talk about a new neobank. There's a new neobank we hear about. They're still coming. I don't say almost every week. We see a new one, and the verticals keep getting narrower. And this one is for musicians. Now, musicians, obviously, there's a lot of musicians. I'm sure they have very unique needs when it comes to financial services, but Nerve is the latest, partnering with Piermont Bank to offer debit cards and savings accounts. They still have a waiting list, haven't officially launched yet. But boy, where's it end? Do we have neobanks for Jets supporters? Do we have
designers?
neobanks for Super Bowl winning quarterbacks?
Yeah, I mean, it's everyone's trying to jump on the train. A lot of these ideas won't pan out. But then someone will buy up the customers for acquisition of new customers. Um, the big thing I see in all these neobanks that's interesting, or I think maybe not that interesting, is what's the real differentiation besides saying that they're for musicians?
Yeah.
Like, do they have into the music industry to connect you to people and that community aspect? Like, the thing I liked about Daylight um, is that there's a community around it that deal with either transitions and they coach and they help people. There's ways to pool money together for certain surgeries or to deal with certain life events. And there's a real sense of um, that you're in it with someone. And what I've seen others is we're for this community, but the offering is get paid 2 days early, and there's not much else behind it. And so I think if you're launching one of these and you can be the Daylight model, I think you have better chances of success versus I'm just for this group and we're launching a digital bank hoping to acquire customers because we focus on maybe this segment.
Right. Yeah. And I think, they do point in their press release that, musicians have trouble getting bank accounts and have trouble getting loans and that sort of thing. So I'll probably do that. I'm on their website right now, and, it's not all that clear to me what their really differentiation is. So,
That's the thing they need to figure out. Can they build an actual community of musicians that help one another and understand each other's needs, like Daylight did for LGBTQ?
yeah. No, I think that's the key, and that's like I remember you shared something earlier this week, Todd, about the only defensible business in the age of the internet is community, and I think that's really what, particularly, I think, for these kinds of offerings.
And that wasn't from me; that was from Steve, I think Uster of Upfront Ventures, I believe. Or
Right.
Steve Euster.
You shared it with me. You shared it with us, so it's yes, I realize. Anyway, let's wrap up with a little fun story from Visa. Visa purchased a CryptoPunk, which is an NFT, non-fungible token, a mohawk pixel art woman. There's a picture of it. We covered the story, and $149,000. Well, I have no idea whether that's just ridiculously overpriced or if it's underpriced. It looks overpriced when you when you look at the artwork, but Visa are staking a claim. They're saying we are all in on NFTs. We're all in on the future of money, and I think it's just so fascinating to see NFTs just blowing up this year.
I mean, when you look at the piece, the quote that stood out to me: to help our clients and partners participate, we need a firsthand understanding of the infrastructure requirements for a global brand to purchase, store, and leverage an NFT.
Yep.
So it's basically, this is $150,000 acquisition to understand how this works. And until we know how this works, we can't then help clients, consumers, whoever uses Visa, the Visa rails, until we understand and become experts in it, we can't then offer some semblance of a product set around this market.
Yep.
And it's To me, it's 101. You can't understand how something works until you try it. So,
Yep, exactly. I mean, it's like,
smart move.
yeah, I mean, because I mean, this could be a whole nother, revenue source for them in some ways. I mean, I know there's like NBA Top Shots. I presume you can. Did you have some of those, don't you, Todd? Do you pay with a Visa card?
Did I pay with a Visa card? I think so. Yeah.
Yeah.
Either that or a bank account, but the option's there. So,
Right. Right.
yeah, I mean, it's, and the easiest way for the entire industry to go mainstream is to have the Visa, MasterCard types involved, because their products are, ubiquitous, and
Of
everyone
course,
uses Visa, everyone uses MasterCard.
the NFT platforms are just loving this because it does provide a level of gravitas that you don't get from just having your average Joe buying an NFT. Having Visa buy an NFT, that's a big deal.
Yep.
Anyway, we are out of time, I'm afraid. Thank you, everybody, for watching. We'll be back same time next week, 5 p.m. Eastern time, where we will review what I'm sure will be another very busy week of fintech news. Thanks, Todd, and have a great weekend, everybody.
Yep. Thanks.